Good morning. This is Ron Brown. It's November 7th, 2025, Friday morning. The market is open and tech stocks are getting hammered once again. I'm going to take a look at the market, but I want to talk a little about the November add-on. I'm providing a new link in the email that I send out to members, and you can just install this add-on. I don't believe you have to delete anything, but if you feel better about it, you can delete the charts and the warehouse views and install. You don't never have to worry about the filters or the the combo rankings because they just overwrite. Now my voice is a little froggy. I'm on something called dexamethasone. It's a steroid, and it really screws up my voice. But anyway, I will get through this. Always remember, the market is your teacher, and we're finding that out the last several days. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. When I send out the email, the add-on link is going to read, this is I'll put an A in there, new November. This is the new November add-on 2025. And the link will be right below it. Anyway, I'll probably use this for a couple of months because I don't anticipate making any other changes to it. And this video right here will be moved down below it, and the video I'm recording now will be up above the link. So just wanted to point that out to you. Okay, what I'm going to do now is I'm going to update Intraday now, make sure all the stock prices are up to date. And then I'm going to pause the video while I rebuild the market analysis user groups. It takes a little bit of time. So I'm going to rebuild everything in my market analysis user groups. So it's going to take a little while. I'm just going to pause the video while I rebuild indexes in group. Well, those are rebuilding. I thought I'd bring this over here. You can see that Bitcoin, which was negative, it's positive now, 1.44%, and the futures are well off their lows. Here's the NQ. You can see on the 5-minute chart the rally. We're getting positive VPA flags along here. Here's an effort to rise, another effort to rise, and now it may be stalling a little bit. But the weekly chart up here on the NQ, you can see how much damage has been done. But the market really has not broken down yet. And you'll see that when I go through my other charts. Now here's NVIDIA. I mentioned NVIDIA. My friend bought clear up here at 211 or something, and it's done nothing but go downhill. And earnings are yet to come. But we're getting a little rally here. Apple has held up well the past few days. In fact, it rallied. It was positive yesterday, I think. Well, I can't remember now. But anyway, we're seeing some buying. Even NVIDIA is getting some release. But PLTR was the story. Buy, and right here on the same day, NVIDIA hit an all-time high. The climax run, and the sellers, those who were buying down here were selling here. So where are we here? We're down less than 1% on the S&P 500 right now. The 600 is down 0.36. Dow's down 0.61. So it's not a total disaster. Who knows? We may get a strong rally into the close. Let's see what we have here. I'm in the market analysis user groups. This is equal dollar weighting. This is market cap weighting. I'm going to click through to the warehouse view, and I'm on percentage price change. This is equal dollar weighting. What do we have at the top? The S&P 400 and the 600. They were down more earlier. down 0.3 and 0.5. What's on the bottom? The SOX at minus 4.1. Now let's get a snapshot of this if I can. I'll bring it back over in a minute. Okay, so that's the, and what do we have here? When I switch to market cap weighting, let's do a comparison here if I can get this Snagit to come over. Okay, this is equal dollar weighting. The S&P 400 is on top. It's minus, where did that go? Okay, so it's minus 5 here. Where are we on the, this is equal dollar weighting. It's minus 5 on the market cap weighting. If you look up here, you'll see this is market cap. So there's a difference. The SOX on the market cap down 3.8. It's down 4.1 on the equal dollar weighting. S&P 1500 down 0.8 on the market cap. I'm sorry, on the equal dollar weighting. On the market cap, 0.8. So there is a difference. And that's why I have them both in here. You can use whatever you want. I think I'll just stick with the market cap weighting for this demonstration. And let's take a look at the broader markets. So I'm going to bring up a chart here. And the charts I'm using, quick pick, are my HGSI index charts. I like to use these charts because I can get fresh data throughout the day just by rebuilding the indexes and then get a good feel for what's going on any time of the day. Now it looks like the market's continuing to rally over here in my other monitor. But so we can live with this. Data from 5 minutes ago. And we'll go with the S&P 500. You can see that the E distribution went up through the A's. It came back down. And just recently, this represents what's happening today. You can see that the D's are coming down and the A's are starting to go up. This is A and B, D and E, and we're starting to get some movement back up. The market is not broken down yet. I know a lot of people are feeling a lot of pain, but if you look at the 18, the 50, the 100, and the 200, yeah, it's come down through the 18, but it hasn't broken down yet. Now I'm going to skip some of these more distribution charts. Here is a advanced decline line where you can get a feel. You can see on the market cap weighting, the advancers are actually ahead of the decliners right now. That wasn't the case 30 minutes ago. So you do a rebuild, that information's in here. And you can see the chart here. Didn't mean to do that. I wanted to go down here. The percent above the 20-day, 30, 50, and 200-day, the red line is a 50-day moving average. You can see the distribution has started back up here. It started way back here on the 50. So the markets are under distribution, but they haven't totally broken down yet. Now I'm getting into what I feel are my charts that I put a lot of credence into because it's a really good snapshot of advancing issues divided by declining issues, same on the volume, and there's a history of it here. Force Index 13, Force Index 2, the VPOC, you can see these three are negative right now, but no big volume days on the S&P 1500. But let's go to the NASDAQ 100. And now you can see yesterday there was a sell signal based upon the advancing declining issues and the advancing declining volume on this bar right here. We aren't getting a sell signal yet today because the advancing issues and declining issues have not met the criteria, which are over here. Maybe by the end of the day, too early to call it in the day, but right now it's on a sell signal from yesterday. Remember, that's the NASDAQ 100. How about the composite? Same thing, except these are rows rather than bright red. That means they're 3 to 1 and between 3 to 1 and 1 to 3. How about the Russell 2000? Rose-colored semiconductor index, sell signal back here on this day. So it depends on the breadth or the number of stocks in an index, of course. If you want to look at the market, the S&P 1500 is probably the best place to look, but you're not limited to that. And remember, you can go back between market cap and equal dollar weighting. Just out of curiosity, let's go to equal dollar weighting and take a look at that chart. You can see a difference. Market cap weighting, the chart was holding up a little better. Let's go back to it. Come on. There we go. See, it isn't as far down. So, what do I do with all this information? Well, I get a feel for the market, the way I want to look at it, not information just looking at the NYA and NYSE information and so on. It's just a good way to really know what you're looking at. Okay, so where are we? Market cap weighting, S&P 1500. Let's look at the 500. Not much difference, not getting buy and sell signals here yet. Market's still in an uptrend. If you look over here, up, spread above average, but not totally broken down yet. So I don't want this video to be too long. I'm just showing you how you can use this. I'm going to change to the index group. Why am I doing this? Because I'm going to go in here into my working scans and just go through a few of these. So I'm in the S&P 500. I'm going to open the first one up. VPA bullish today. This is based upon yesterday's data and sorted on raw combo. You can see that where this finished up yesterday. Now I'm using the same filter, but we're going to look at these intraday prices. And you can see which of these VPA bullish signals are following through to the upside today. Here's Akamai, 13.56 up. Let's go to a different chart. I'll quickly go to my most used charts. And I'm going to go to intraday statistics. And that is what you call a loose chart. Ian hated loose charts. I hate loose charts. I mean, look at the emotion in here. How do you trade a stock like this? Well, you don't. I mean, you can. If you bought it here, 79, it's up at 83. But I like to look for much smoother stocks. Ian used to preach tight, neutral, and loose. This is what I would call a very loose chart with some good news. There has to be news. I'm going to do the alternate N, which takes me to bar chart Premier, which I've got. And let's just look at the news. What's driving this stock today? Sales top estimate, stock soars. You can go in and read the news if you want. But looking at it longer term, let's look at it longer term. Doesn't look so pretty there, does it? Here's the group. So anybody that bought up here and held is still way underwater. Alternate 1, we were getting some VPA buy signals here. Strength seen returning after a downtrend. Here's a confirmation of that strength before this happened. So the VPA signals were telling us that somebody's buying, somebody's rolling the dice before earnings. It obviously paid off for them. Let's look at this one. GE Verona. Let's take a longer term look at it. Alternate 3 key. Very strong stock, very expensive stock. Let's go back to 2. This is a sell signal here. Here is no supply, sign of strength, and a test, which is confirming this. So it has not moved up yet. It's up $1.95 or 1.95% today, holding at the top of its range. So there's some accumulation coming in. Notice that this updated EXPE is now number 2. Let's take a look at it. Must be another earnings surprise. Now this looks like this is a pretty tight chart. Tight to neutral. Let's look at it longer term. Then it's a loose chart when you look at it in those terms. But looking at it recently, it was pretty tight in here. Tight to neutral. And then, of course, there's going to be earnings news. Alternate N. What do we have here? News and headlines. So it's another good news story here, which you'd assume just by looking at the chart. But are you going to chase that now? No. Look at the group line. I mean, anyway, you're always going to get a few of these. But my point here is you can use these working scans and look for stocks in the S&P 500 to narrow it down very quickly. Now this one right here is intraday money flow in. This is, I combine VPA signals and Wyckoff signals in this filter. So this is showing, using yesterday's data, it's showing the stocks that are moving up today. And I already looked at Akamai and Expedia. Here's Kimberly-Clark, up 3.26%, but look at this on earnings. Now it's a real bottom fish, but you can see that stopping volume, strength seen returning, confirmation of that strength. So buyers are coming in. Buyers with a long-term horizon are buying this stock now. I'm going to do the alternate N. Let's see if we can find the news on it from the other day. Says there's sticker shock, why Kimberly-Clark sell-off is an overreaction. Anyway, I don't want to take time to read all that, but this all works together very well. And you can just go top down. Get rid of this. And if you want to see which of these stocks are using today's data intraday in the S&P 500, notice it cuts it down to 5 stocks. These are all running above volume, either on the percent volume to the 20, the 50, or the 90. So this is where the action is. We've looked at all of these. We haven't looked at Monster, have we? Now here, if you chase this, you bought here, went up here. It's selling off now, but as I zoom out, this stock has been in a, that's kind of a neutral chart. It's been in a nice run up here until the shakeout, and some news evidently came out on it. But it's just a quick way. If I want to look at the S&P 1500, this is the list of stocks that have a volume spike today. Of course, a lot of the same stocks are coming up. You can see how fresh the signals are here and how old they are. Now, SanDisk, By the way, I updated some groups. I sent this information to George over the weekend. This will be added to a group. Should have been a long time ago. But look at this stock. This is what you call a tight chart. And why? I don't know. But unbelievable. Big difference. You put it in context. 3-6. It never comes down here to challenge the 18. Yes, there's a pullback on the 3-6, but that was a buying opportunity. This is the kind of stock you want to look for. You want to look for tight charts. You don't want to look at don't waste your time with charts. So many centers out there. It's unbelievable that it's really a visual thing more than anything. Just remember, tight, neutral, and loose. Okay, this is getting pretty long. I just want to show you some of the things that you can do with HGSI. This is just a small example, and I'll be coming out with more in the future. Hopefully, I'm feeling better, and hopefully that'll continue. Thank you for listening, and have a great weekend.